Okay, from previous two classes, we learned about trading the small candles and large candles. Today, we are going to see the long candles, that is also known as rejection candles. This candles also is known as reversal candles. So, what is this candle have is this candle has a long tail. So, if you have a long tail, then it is a reversal candle. You can see this type of candle has a major impact in the stock market, which is this candle that determines the change of trend in the direction. If there is an uptrend, if you see this candle, you must be aware that the trend is going to change. So let's see about it. So this candle leads to the reversal of the current trend. Whatever the current trend may be, it may be the uptrend or downtrend, even sometimes in sideways. You must be aware that this is going to change. So you too get ready at this time. So rejection candle leads to fresh move that begins when the prior trend ends. Once the stock refuses to go further in the same direction, same as I said, the stock will not move further in a direction, which leads to a fresh move. Okay, so rejection candle leads to the trend reception as well. So it's not only a trend changing candle but also a trend receptions. If you see a dip in a ongoing trend, if you see a dip in ongoing trend in at the level of support or resistance or demand and supply, you can see a trend is following the same direction with only a minor dip. So so this is an important candle. So you should not enter the trade once after the reversal candle is formed, or you should not panic and exit the trade after the reversal candle is formed. You need to wait for the confirmation of another candle in the same side. For example, if there is a red reversal candle, you must wait for another red candle above that, so that you get the confirmation and you can enter the trade. So you must wait till the confirmation. As I said from the beginning, our aim is to minimize the risk and maximize the profit. So be patient and wait for the confirmation while trading rejection candle. So we are next going to see one of the most important indicator we are going to ever see in the stock market history. Yes, this pivots are from his histories. A long time, even long time back, the only indicator till date now very well used is pivots. So his pivot is a very much important indicator. So what do the pivots do? The pivot value is not, you need to understand this, the marketplace where the buyers and sellers are. They always search for the fair value of price, like you go and ask for a discount, they will raise the prices like that. It will also always search for the fair value of the stock. So in the range market, you can see a stock is trading between the pivot zones that what the top is also is a resistance and the bottom is also a support. This act as a barrier in which the stocks trade in between. This means that demand and supply are balanced at this time, and nobody is to what rising or lowering their prices. So if the price exceeds the demand or supply exceeds, then the breakout happens in either side, either upside or downside. So as I said before, the pivot is a particular level of price. The instrument should be at the equilibrium between buyers and sellers. You can also take as the pivot value is the fair value. Above it, when a price is above the pivot value, you can see it as a uptrend. When the price is below the pivot value, you can see it as a downtrend. For our confirmation, we will keep the confirmation as R1, and on downside we will keep the confirmation as S1. So from the pivot, you can expect a directional move in the price. You can see a directional move either ways from the pivot level. So if pivot levels are moving up, that means that the price is bullish. If the pivots level are moving down, this means it is bearish.